The difference between a successful person and others is not a lack of knowledge, not a lack of strength, but rather a lack in will. Vince Lombardi. My friends, all we ask from you, 10 to 15 minutes each and every day, that willpower to be in the market, to learn the nuances of your favorite stocks and ETFs is invaluable, and you'll only get it with that willpower. It's not about strength. It's not about knowledge. It's about willpower, because with willpower, you'll have that strength and you'll gain that knowledge, wisdom, and experience. Let's jump into these charts. Down day all across the board. The biggest downer for the day was Bitcoin. Let's jump first into the S&P 500. What do we see here? Well, we had a red spinning top last week with lots of volume. We have another red spinning top a little lower, but not reaching the lows of last week. An average volume. Does this mean, is this a typical setup for a rollover? No, it's not. Why isn't it? It's because we don't have average volume with the interim high on either that week. It looks, well, let's look. The high 706.03, 607.03. That was this week, the week of the 2nd, and we were below average volume. And then, of course, we had the next week not quite that high, and then last week, beginning the 16th of December, we had that red spinning top, and again this week, the 24th of December, another red spinning top, a little lower as far as the high goes, but not a lower low. So what is the market doing? Does look like it's pulling back. Do we feel certain and secure about that? No, it's not our beautiful, perfect setup. And when it's not, we don't pull the trigger, right? We wait for perfect setups. And again, you have a world of stocks. You have hundreds and hundreds of stocks and ETFs that you can go out, practice trade, perfect your knowledge of, but when it's not working, you don't push it. That's more akin to going to Vegas and betting on snake eyes. Again, it's betting. We don't like to take those kinds of risks. But for the record, the S&P is down for the day, 1.05%. The NASDAQ 100, 1.33%. Now, we did have an interim high last week with a green spinning top. We have a green pretty much doji this week below the line. It didn't reach average volume. So again, we see a pullback in both of our stock indexes, both the S&P 500 and the NASDAQ 100, the tech stocks. Does it mean these are going down? No, we've seen a similar thing happen back on the 18th of November, the week beginning then. And we saw one very similar to the one we have right now back on the weeks beginning the 21st of October and the 28th of October. And then what happened? Market went up each time. So does that mean we pull a trigger going down now? No, it does not. So we are being patient. We are being careful. I'll show you a beautiful rollover, classically set up. You see it here back on July the 8th, where we had the interim high with above average volume. Only needs to be average. This is a little above average. And then what did we see? A red spinning top. Beautiful. With average, above average volume. And then we captured a beautiful 3 following weeks of down movement, capturing a nice profit there. Clean, beautiful, classic setup for a rollover. Do we see that here? No, we don't. Now, could it be rolling over? Of course it could. Could it go down for weeks on end? Of course it could. Does that mean we're trading that? No. Why? Because the setup wasn't right. It's easy to go back into, well, if I just would have, woulda, coulda, shoulda, that doesn't cut it for us. We want to have the best opportunity with the highest probability of capturing the move, whether it's rolling over, going down and going to an inverse fund like PSQ, which is a single inverse of the NASDAQ 100, or if we're looking to go negative on the S&P 500. Those are both single inverses fact, I'm going to put our training, Inverse Funds, How to Make Money When Markets Crash, for your consideration in your practice trading. I'll put that at the end of today's video for you. Please take a look at that. And it's something for you to experiment with. Not everybody likes inverse funds. Again, the ones I like are the one-time inverse. I don't like those big, high risk, 2, 5, whatever they are, times inverse. What I like is a single inverse. Now, again, the fees are high. They're recalculated every day. Your losses can be magnified. That's why you practice trade these things. We're not a stock calling service. We're an education firm. We want you to practice and make your mistakes. Please, please don't go out there and spend real money, because you will lose it very quickly, because there are people who have mastered these charts and they will take it from you. Let's see what's going on with 20-year U.S. government bonds. What do we see there? They are continuing to go down. We didn't have a buying point because we didn't have a pretty rollover. Again, as we go back and look, just did not set up very nice for us this time. It does still appear to be going down 0.82% for the day. You saw nice volume last week, not a lot of volume this week. Look on the 2-day chart, not a lot of volume these last 4 days. That was the Monday, Tuesday, and the Thursday, Friday, because, of course, Wednesday, markets were closed for Christmas. And you can see where things have moved down through the week, slid sideways a little bit, and then dumped on over on Friday. So 20-year U.S. government bonds are down. Let's look at what's up with gold. Now, I found this as I was preparing for today's show. I drew the trend line. Remember how I told you, hey, guys, classic turnover, check it out. We had an interim high with average, above average volume, red spinning top. We jumped in. We took a profit on this of one-time ATR. What do we do after that? We let the rest of it ride, don't we? Well, what happened? We saw the market slide sideways, sideways, sideways. Then we had this bump up week. If you were running out this ray here, and again, if you had it right here, look at what that ray did for you. Didn't penetrate the ray, did it? The candle body itself. We saw where the wick penetrated it, but again, just kept on running. And we went ahead and said, hey, let's connect this candle here. And what do we got? We've got a beautiful trend line that, look at, oops, I didn't mean to have that shift out. Look at that. It didn't penetrate, the candle didn't penetrate. If you were just running that ray, in fact, it goes all the way out to here. Is that not beautiful? Something for you to think about. Every time I go back and look at trades that have worked for me, trades that have not worked, and I really explore, why didn't this work? Sometimes you don't get answers. Other times you do. And the interesting little things you learn and you put into your trader's notes, so that when you continue to trade things like GLD, TLT, QQQ, SPY, HODL, you have your little trader's notes that you can go back and look, that give you ideas about extending possible trend lines when you have reversals. All the kind of things that own particular ETFs and stocks are something you should look at and consider using as you go forward. Now, again, they don't work with all of them, but it might work going forward with something like gold. Those of you who've been with me a long, long time, remember when we had the 4-hour total trading chart on gold? We had a half-day chart that we traded on gold for a year and a half. We could trade off the half-day chart successfully over and over and over again. And then it stopped working a few years ago. But it worked for quite a while, and we used it. So what do? You do things that work for as long as they work. And when they stop working, you just say, hey, too much of the market figured it out. Something happened, and it doesn't work anymore. But always look for things that work. And when you discover something new that works, I tell you what you do. You write me and you tell me about it. Don't tell anybody else. Just tell me. But those are things that you pay attention to and you use to your advantage. I would encourage you, don't hesitate to email me your little tip, because Tom will very much appreciate it. Now it'll be just our little secret. Okay, that is where we are on gold. Gold is continuing to move down for that 8.69%. But look, we didn't hit the low of last week. We didn't have the volume. Haven't had it on the 4 days of this week. And again, it's Christmas week. You don't have a lot in the market necessarily. You can see how light the half-day chart has been over this last week or so. So again, we'll just continue to watch, wait and see. Gold still in that down move. And as I've told you, for all these weeks of the sideways slide, even that pop up there, we talked about the down push from this interim high back on the 28th of October, the red spinning top with all that volume, and then all that down volume. And then the weakness that we saw that continued, and the death of that attempt to move up back on the week beginning the 9th of December. Lastly, we'll go to Bitcoin. HODL ended the week down again. Thursday and Friday, we saw things moving over. A good bit of volume in the morning on the market. You can see where it plumbed down to lower than it closed at the end of the day with less volume. But again, Bitcoin has been moving down decently these last 6 days. Haven't reached, well, let's see, the low of that Monday, Tuesday, the 23rd, 24th was 104.44, 105.42. So yeah, we didn't hit that low yet. But we got down moving candles. We'll keep an eye and see where Bitcoin starts this new week. My friends, I so appreciate you being with us. We always love to hear from you. CW@chartingwealth.com, and Patreon members, look for a surprise this weekend. You heard me talk about it yesterday. It's coming out to you. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.